You'll find the link to crypto safety email course in the description and pinned in comments below. Most people lose money in crypto because they chase the story, not the numbers. They see headlines, influencers, Reddit hype, and buy. What if the real risk isn't the coin, but the way the crowd thinks? Hold on, because the live trade I'll show exposes a tiny candle you will never forget. Today you'll learn three simple frameworks to spot hype before it destroys your gains. You'll learn one psychological trick traders use to manipulate markets. You will get a practical 7-point checklist you can use before buying any coin. At the end, I'll walk through a real trade and show exactly where most viewers would panic and how to avoid it. If you want clear, beginner friendly crypto lessons that stop the guesswork, subscribe now. We post concise strategy videos every week that protect new traders from expensive mistakes. Here's the first framework, and it's simpler than you think. Why do coins explode overnight and then vanish? There's a repeatable life cycle, and recognizing it gives you the power to act before the crowd. Think of a hype cycle like a wildfire. It starts slowly with influencers, retweets, and early buyers. Then it becomes a blaze with fear of missing out headlines and charts that go parabolic. Finally, oxygen runs out, sellers panic, and the price collapses. The cycle stages are seed acceleration, peak exhaustion, and fall. Beginners buy in the acceleration phase because everyone confirms the fear of missing out, and that's where most get trapped. Later, I'll show the exact indicator combo that predicts when acceleration will flip to exhaustion. But first, learn the second framework. Public sentiment isn't just buzzwords, it's measurable. And when sentiment and volume diverge, danger follows. Combine three data points: social mentions, trading, volume, and wallet flows. If social mentions explode but volume and on-chain inflows lag, it's often manufactured hype. It's bots and coordinated promotion, not real demand. CoinEx had 10 times Twitter mentions in 24 hours, but 20% of trades came from two wallets. That was an early warning. This is where greed gets violent. You see the buzz and assume institutional interest, but it's often shallow. Next, I'll show a practical checklist to test sentiment in 60 seconds. Don't buy before you try it. Quick test: open the coin's top 10 wallet list. If 40% of supply sits in three wallets, pause. That's not decentralization, that's an exit plan. Use this before any impulse buy coming up, the psychological trick manipulators use. Here's the controversial part: many organic rallies are engineered. I'll reveal one cheap trick that consistently triggers retail fear of missing out. Players use narrative plus scarcity illusions like limited time airdrops, countdowns, and influencer leaks. Add fake buy walls and coordinated tweets, and suddenly the market thinks it's a one-way rocket. The twist: the same people sell into the peak. One trade I tracked showed an influencer hyped a coin, price doubled inside 12 hours. At the top three wallets sold into the rally and moved funds off chain. Retail held the bag. This causes crushing regret, and that regret fuels more sell pressure. Later, we'll walk through a real chart and pinpoint the exact candle where those whales exit. You will spot it every time. Most viewers miss the whale sale candle. I won't let you. You don't need to predict the market, you need rules. Here's the 7 point checklist I use before any buy. One, position size, never risk more than 2% of capital. 2, liquidity, test 24-hour volume must support your exit. 3, top wallet distribution, less than 30% in top 5 wallets. 4, sentiment check, social spike must match on-chain inflows. 5, new filter, verify announcements from official sources. 6, time frame alignment, day trade versus HODL strategy. 7, exit plan, set target and stop loss. If a coin's 24-hour volume is $200,000 and you plan to buy $5,000, you risk slippage. That's a fail. Rules remove panic. When the market screams, rules keep your money. Now, live trade walkthrough, we'll use this checklist in real time. Watch closely. This trade starts with a 25% spike. Most viewers would fear of missing out in. I'll show step by step where to act. Step 1, run checklist volume supports entry number. Top wallets hold 45%. Yes, that's a red flag. Step 2, check on-chain inflows, none. Step 3, wait for pullback or confirmation candle. Action, skip. Result, coin dropped 60% next day. This is the moment that turns I could have into I didn't lose. Up next, the most common mistake that turns a small loss into a disaster. Here's the single mistake that destroys long-term returns: averaging down into a collapsing hype coin. Averaging down feels logical. Buy more to reduce average cost. But in hype crashes, the depth of the fall often exceeds any reasonable rebuy plan. You turn a manageable loss into a catastrophic one. Trader A averaged down at negative 30%, negative 50%, negative 70%, and ended with capital tied up in a dead project. That pain keeps traders out of markets for years. Instead, use these alternatives. Coming next, if you shouldn't average down, then that what 3 better moves? 1, reevaluate, did anything fundamental change? 2, cut loss, accept small loss and redeploy to higher conviction trades. 3, hedge, use short-term derivatives or stablecoin strategies to protect capital. Small disciplined losses protect future freedom to trade. Almost done, but there's one final rule that ties everything together. If you take one rule from today, let it be this: always trade the narrative and the numbers. Numbers like volume, liquidity, and wallet distribution tell you what's happening. Narrative like influencers, headlines, and countdowns tell you why people feel compelled. When both align, it can be real. When they diverge, beware. Before any buy, ask, is there real demand or just a story? If it's mostly story, you are speculating, not investing. Adopt this rule and you will avoid the emotional roller coasters that wipe out accounts. One last quick tactic to protect gains next. 2 practical ways to lock gains: trailing stop orders for short-term trades and periodic rebalancing of HODL positions. If you hit a 40% gain, consider locking 20% and letting the rest run. If you want easy practical crypto lessons that protect your capital and build real understanding, subscribe now. We break down real trades, real mistakes, and clear checklists so beginners stop losing and start learning. But before you make any trade, watch the next video. I'll walk through this institutional adoption, and generational shifts that change which coins survive long term. Click here, it could save you from one of the biggest beginner mistakes. Don't trade another coin until you see it.